Welcome back to the floor of the CME Group here in Chicago, February 10th. I'm Killer from Treasury Curve. Treasury Curve is an institutional money market portal. We assist firms in their overnight cash management. Thanks yesterday to Dr. J for the coverage. Appreciate it, Dr. J. You're the best. Let's talk a little bit about Uncle Ben's testimony yesterday. Sensational. He got up there and he defended his policy. And no matter what side of the fence you're on here, folks, he had to get up and defend his policy of this QE2. And I think they're going to stick to this QE2. But I think that next Fed meeting is really going to be eye-opening to determine the QE3, or possibly they discontinue that QE2 just a little short of that $600 billion commitment. You know, I think this clarity is what the market is looking for. You know, and there are a lot of moving parts in this market. None of this stuff has gone away. You know, the Meredith Whitney municipality situation, they're trying to get her to come out to Washington. She has no inkling to do that, and rightfully so. But I think that's still a situation. The Egyptian situation today, President Mubarak is supposed to step down. That would be pretty amazing to happen over there. And I think that rallying and those protesters, what they're doing, and they're achieving their victory, that may spread to Yemen, to Jordan, possibly these other countries. And there was actually a lot of talk yesterday about these strikes in Egypt and the Suez Canal being shut down. That's 4.5% of all the world's oil going through that canal. So that could really be a market hiccup in the event there is a Suez Canal shut down. You know, I want to circle back quickly to this talk last week, the advisors to the Treasury about this 40, 50, possibly 100-year bond. You know, down here in the pits, the Chicago Board of Trade, this is 100. The Merck guys, this is 1,000. But in all actuality, what's the difference between a 100-year bond and a 1,000-year bond? They're kicking the can so far down the road. It'd be amazing if it actually happens. We'll see if it comes to fruition. You know, currently this Ultra bond is the fastest growing contract here at the CME Group right now. So maybe this product gets pushed out, but the 100-year bond is just hard to get your arms around conceptually. So let me know. Contact me at The Killer on my Twitter, or comment here in this video. Are we going to have a 100-year bond? Let me know. Let's drill down on these treasuries. You know, after staring over the cliff the other day on the 30-year, we touched 116.26, the highest yield we've seen in the 30-year as well as the 10-year in quite some time. And yesterday, complete reverse. They came and bought that 10-year auction. It was amazing buying the way they came into the marketplace and bought it across the whole curve, folks. You know, I think right now, you know, I tweeted this morning, this 117.23. Very, very important number. That was actually the unemployment low. So be mindful of that 117.23. If we rock underneath there, we could test that 116.26 level. If we stay above it, well, all bets are off. S&P, you know, we came off hard this morning, touched 1308.50, and we bounced like a rubber ball. You saw that thing snap right back up to that level 1316, 1317. And we're kind of churning right now, and if that market does get back above 1320, I think that high is in danger. We are seeing some nice resistance, if resistance even exists anymore in the S&P, but on the chart, it's looking 1328 is some nice resistance. So play these levels. I really think that 1300 level is a mine kind of situation. Everyone has been talking about 1300, so we get back under it, it could be pivotal. But I think there's a floor here, and I think Ben Bernanke is sitting there bid on the computer. He's bidding 1300 all day, all week, all month long until he's done with his $600 billion. So let's talk euro currency. You know, the euro currency, we saw the US dollar react to the overall market. We had a sensational bounce off that 100-day moving average. I tweeted out that 100-day moving average just about every day lately, and Monday it was 135.05. We touched it, and almost a 2-cent rally off of that. Wicked move. We saw them really bounce and come and rip those shorts off. You know, I think today, you know, we're seeing it go up to 137.24 overnight, and it's bounced back, and it's kind of come in at 135.24 on that 100-day today. We'll see if they test it. I think 135.72 is the low here, but that euro currency is really whipping around right now, looking for clarity in the Middle East, in the sovereign debt, and all these issues that we continue to talk about. So good luck trading today from the floor of the CME Grouper. I'm The Killer, and one thing, remember, be the hammer, not the nail.